In this video, I want to explore how many losers you can take in a row. A lot of people ask this question, and I've got a comment a week or so ago. How do you manage to take trades if you had a few losers? And well, here's a video to explain maybe. Now, we can all go through periods of losing. Obviously, I had a few losers on a trot there, and it's not unusual for me to have such a time. So it's to be expected. That's what comes with professional trading or trading of any sorts, is that you get winners and losers. But of course, when do you stop trading? Now, I'll come back to this in a minute because it's not really a simple decision of actually stop trading, because most people trade a number of strategies. Now, if you're trading a lot of different strategies, then is it all of the strategies that are going wrong at the same time? Is it one of the strategies is particularly bad? Is it, has the market conditions changed, or if you've changed? We always blame our strategies and our tools, but we rarely look at ourselves. And has something changed within us that sort of made that strategy or the strategy is not working? Are we not following the rules? So if we change things. Now, I always say this, and I can't sort of push it hard enough, is it's important to know the results from each strategy, understanding your results, because this is what makes you able to continue to trade. You really need to know what can be expected to happen. I call it expectancy theory, basically, in terms of each strategy. I've been working over the last many months now on the strategy, and I've reshaped it to what it was. It was the setup's exactly the same, near enough exactly the same. Actually, I've been a little bit simpler with it, but I changed the method of reacting to the pattern, if you like, the strategy itself, and it's made quite a difference. But by doing so, also, I've literally gone back and tested, and I get this idea of what to expect. So I was looking at a video a few weeks ago. I talked about what do you do when you've had a long winning run? And you sort of, because you know that there's a loser coming around the corner, and the thing is, you don't do anything different. But here, we need to know what's going to be expected. If you're relying on someone else, I mean, it's all right if you've got a nice fancy bit of software like our AI trader or something like that, because it can give you this data closely. But if you're just taking a strategy you read out of a book that might be how many years old, things may have moved on, markets may have changed. You may be some guru out there with his big flash Lamborghini, or his trading den, whatever they may be, they may never use these strategies. Now we basically trade our strategies and call them in our trading room, so they have to work. So if your strategy has had runs or losses in the past, if you're looking at it now and you say, well, there's just a run of losses in the past, that's fine, it's done that before, and then it comes good again. So you just sort of go with it. So how many losing trades will you take? Now, I looked at, as I say, this strategy. This strategy I'm looking at, it had a 58% win rate last year overall. Now I say overall because it's not 58% a month or something like this win rate. When you look at things over a period, different things change. Volatility might have picked up, dropped off, and that's what it did. I mean, there was a couple of months had losing months, and it was the volatility just died, and I was sort of looking back and deciding whether to trade that particular month if that volatility was so bad, which we see around sort of July, August time, leading into August, maybe even sometimes September. But if there's a period of flatness, maybe just leave it out. But perhaps the time you leave it out, it'll be the time it runs really well. So personally, I tend to let it trade and run it through. Now I'm going to do a little thing with you here then. So we're going to look, so here we go. This is the run of trades. So we have loser, loser, winner, winner, loser, loser, loser. Goodness, what are you going to do now? Oh, winner. And then you get onto this run, and this is, look, how it can come out. It's only got a 58% win rate. In fact, this month here, it had a 62, it ended up with a 62% win rate. Didn't look like that in the beginning, did it? This was January. I can actually show you the numbers. It's, yeah, no dates on there. I'm quite happy to show you the numbers and how it came out. So this was the month of January, and basically it just started off really quite, a couple of losers, couple of winners. So it's flat, some winners. Now, if you trade it on a multiple, or in terms of reward, in terms of this is 1 times reward, this is 1.5 times, 2 times, etc. So if you want to go for 2 times, there were times when you obviously net more and it covers the losses. I can go into that another time, but the important thing is, even if you just look on a one-to-one basis here, you're sort of you're taking an awful time at the beginning of the year. This is $1,000 or £1,000 account. You see, we're getting quite a drawdown at the early. There's about 6% drawdown at the early part of the year there from those losses. And for some people, or maybe more than that actually, it's too much to bear. And of course, they're getting through this, and how they're reacting to this is that when you get through into these 3 or 4 or 5 losses, is you start thinking, I ain't going to trade this anymore, it's rubbish. But I knew last year it went through phases just like this. January generally is a bit quieter, and you can get some low volatility, particularly in the first couple of weeks, and that's what happened. It didn't really help this sort of, this is like an intraday swing strategy. It runs off a 60-minute time frame, so you could just see how it was. However, it got into a bit of a zone there. Now, if you get into a zone like this, it can be just as bad as if you're into a period of here sometimes, into these losses. I'm talking about losses particularly in this video, but it can be just as bad being in a period of winners, because the temptation, of course, is to think I'm a king of trading here and increase the sizing or do something different, and you then suddenly run back into a run of these, and you sort of, okay, the first one, I've doubled my price, doubled my size and everything else, and then say you think, oh, typical, and then the second one hits and you think, oh well, it's only 2, and then the third one hits and then you go back and you might start reducing your size or back to normal, and you're still reducing your size when you're running into this. You're getting back in. If you haven't given up at this point, you're starting to reduce your size, and the trouble is you're not. This was a I'll bring the numbers in. It was a 5% winning month. On a one-to-one basis there. I mean, my preference is 1.5 reward, because it just gives better, it's the optimum for this strategy over the time frames at the moment, and it just gives the better kick. As when you look at the 1.5 column here, and just see when it's making 1.5, so yes, you could say, well, the 2's doing better, but over the periods, the 1.5 seems to be just feeds you more frequently. You get dot balls otherwise. These sort of zero winners, which for me, it's about the profit, not really about how many winners I have. But a lot of people will be quite happy with the 5%, just to take the 5%. But as I said, the more important thing about this is that you can run through there with quite a series of losses. Okay. Now, as I said, they ended up with a 62% win rate over that time. So it actually ran, it picked itself up. But I knew from previous years how it goes, and it has phases. It's not always in the same month. There are months when you think this is going to be really good, but then you may be waiting for news and the markets get a bit flat and it just doesn't deliver. But how do you know it's going to not deliver? You don't. So you trade it all. Now, by looking at these numbers and going, I mean, even now, we're now into March, and you're looking and you're seeing some, periods of, it's had a half decent run again. So it must be due a loser soon. But we've had losses back here, right the way back here. So it's had a pretty decent month overall, and it's running currently win rates at 64%. I know all this. By the way, these yellow ones are the ones I've called in the trading room, or I've taken. Some of these I've just missed, unfortunately, and actually this month I've missed probably more. I missed this one the other day. Someone called it on our app, and I just couldn't get into the trade quick enough. But again, it's a 1.5% return I've missed, and I feel annoyed by that. But well, I've got something to stop the misses in the future, but that's another story. Anyway, But looking back at the history there, you can see, and it reassures you. You keep running, and the total just tots itself up. It'll have peaks and troughs. I know it had a maximum drawdown last year of around about 8% on a 1-to-1, about 10% on my 1.5-to-1. So I can live with that. The important thing, as I've already just hit on, is to avoid changing position sizes, because 3 losses on a row, and I know people will start halving their position size, and of course you hit a winner. So if you've made 3 losses and then all of a sudden you at full size position and you're in a half position for the winner, well, you've still got 2.5 losses instead of just having a loss or 2. So it's crazy to change position sizes. And changing the position sizes kills the expectations theory of the strategy, of what I'm expecting to draw out of there. I'm not expecting it to make 64% this year. I'm expecting it to make about 58%. Roughly, that's what it does. If it does a bit more, does a little bit less, that's what I'm expecting. If all of a sudden I start becoming over choosy in some strategy, or I can start saying, actually, look, it's at 64, I'll pile in a bit bigger. I'll up the percentage. By doing that, then I could just run into a roll of losses, and I could wipe out the good I've done effectively. One thing I would say with trading, most people, and I say trading, but trading and losses, is people give up far too soon. Maybe 2 losses, some people will actually, I'll sit out this one, or I'll go half position. With just 2 losses, half a position, you've just and you get a winner. You've just made it more difficult to get your returns. You've got to understand that you've got to pursue this. But you must know the outcome. The more you change things, the worse you'll end up if you're not changing for the better. There are some things, of course, that you should change. I'm saying that they constantly change things. Constantly changing things for the good's a great idea. But if you're changing on a particular strategy and you're trying to do too much to it, you more than likely just make things worse. So to summarize then, know your strategy, trade it, stick with the rules, keep the records. Doing that will actually make you more comfortable. You'll see the figures. Keeping the records, I can run back. Okay, as I said, at the moment I'm looking at the first 3 months of this year. In fact, they've all had, I mean, we're on a more than 9% this month at the moment. 1.5 multiplier. There's a 9% return January, 6% in February, and well, it's over 9%, 10% return so far this year. This month rather, and we've still got a few days to go. So it's having a run. Keeping the records. I expect that after some winners like this, I'm going to get some losses. In fact, I'll show you. I'm showing you that that's on 2 currencies. I've been keeping a trading account running just using 1 currency, and this was from, I actually ran this from the 15th. In fact, just ignore the first one there. I've been showing this quite a bit, but a good reason I'm showing it is because it goes through these periods here. Look, so it's on the euro, it wasn't going quite as well as the euro yen, and it sort of had a couple of losses, then had a dot ball. It just didn't do too much. A couple more losses, couple of more, it didn't get to first target. That's the way it got to. Another one there. So it had that whole run there just purely on the euro that hadn't gone particularly well. It's got a couple of I've missed a trade in between this as well. As one that I missed off there, which would have been another winning trade in between that, but it doesn't matter. But it does matter because you don't want to miss them. Important thing is to catch them all. But it's important to understand what you can. You're going to run through these shadier bits, but by keeping the consistency of what you're doing, the roller in the first place was good. Then we had, no, it's a flat trade basically. It's just a bit of swappage fee, and then some more winners, and it's running pretty well. The account, it was only 1710 that went in it. It's, oh, by the way, it's got no open positions or pending orders, just in case. Open positions, I haven't closed all the losing positions off and left the winners, or left the losers open, or whatever else. That's the account. 277 at this stage, and it was 1710 when I started it. on around about the 15th. So what's that then? 277 divided by 17, 10% is running at 16% at the moment. So it's not bad, but I'm poking the eye with a sharp stick, as they say, with one strategy and only one currency. So that's what it's going to do. That's had some, as I say, some times where it's not so good, but I'm okay with just carrying on running it, because I know it's gonna I'm gonna give something back. I'll get some, and then I'll run on a run of winners again, and vice versa. That's the way it works. However, finally, I would say, when I'll answer the question at the end here, stop trading a strategy if you do not understand it and have not tested it. If you're just relying on something you've read in a paper or in a book or on the internet, on YouTube or whatever it is, I know I'm on YouTube here, but if you haven't looked at it yourself and looked at what it can possibly do, and then you're running into a lot of losses, it may be because it can't do it. We've seen something quite recently. Something was shown to me of a particular method, the red and green method. Anyway, it didn't win, but it showed all. I said we didn't win. It showed all winners, no losses. That there's something wrong with. Anyway, if you get something like that given to you and then you start trading and it's losing, that's probably because it's not a very good strategy and you need to test it. I'll leave it there. I hope you find this useful. Bye for now.